Hello, and thank you for joining us on this training session where we will be discussing the National Financial Regulations. By way of introduction, my name is Emma and I work in the Governance and Compliance team, which forms part of the Finance Specialist within the National Finance Division. Let us begin by discussing the background to the updated National Financial Regulations, which were released on January 31st, 2023. There is a 3-year internal controls improvement programme underway across the HSE, comprised of a number of different work streams. One of these work streams was to rewrite the National Financial Regulations to make the documents easier to access, navigate and understand, with the overall aim of helping to strengthen the HSE's internal controls through increased compliance levels with the NFRs. In terms of the agenda, we'll cover a lot of information. We'll focus on how to navigate through the new NFR documents, including how to interpret checklists, diagrams, and icons you will see across the NFRs. We'll also provide explanations on the types of supplementary documents available to you, which are designed to help comply with the NFRs. We'll cover the NFR change control process, where to find the new NFRs, the impact of IFMS on the NFRs. We'll look at the purpose of each NFR, highlighting some of the high-level differences between the old NFRs and the new NFRs. The intention is to summarise the most important and relevant changes, not to provide an exhaustive list. We'll go into more detail on 3 of the NFRs, NFR B1 Procurement, NFR B3 Employee Administration and Payroll, and NFR B4 Travel and Subsistence. Let's take a look at the new NFR document framework. Previously, there were 31 NFRs, and these have been replaced by 11 NFRs within the A to D categories set out here. The NFR A document covers the internal controls framework and principles, and this provides an overview of the internal control environment in which the HSE operates and the associated compliance requirements. The B documents are broken into 7 separate areas and are intended to be operational regulations, which are very much aimed for practical audiences. They deal with topics such as procurement, travel and subsistence, payroll, and property and equipment. The set of C documents set out HSE custodian requirements with regard to patient private property, RISMAC, and supported banking. Finally, NFR D, financial reporting, provides an overview of the financial reporting policies and controls included in the preparation of the HSE's annual financial statements. The NFRs have a very broad reach. They apply to all permanent, temporary and agency staff of all HSE divisions, CHOs and hospital groups where services are provided on behalf of the HSE, and Section 38 and 39 providers where services are being provided on behalf of the HSE or where HSE grant aid and funding is being received. Just to note, as flagged by the loudspeaker icon, each NFR contains an introduction and an at-a-glance page, which also outlines the key users of each document. Over the next few slides, we will bring you through the overall look, feel and presentation of the NFRs. This is important because they've undergone a significant transformation. I'm going to start with the new cover pages. Each NFR has a cover page, and that includes the name of the document, the category reference, for example, B1, B5, etc. A distinct colour for each group of NFRs. For example, here we have the B documents and they have a blue theme, the version number and the effective date. The second and third pages of each NFR provides a document overview. At the top of the page, it outlines the main topics that are covered in the document. Underneath that, it notes who needs to read the policy. The next paragraph covers the change control process. This is how the document is kept up to date and how changes are processed. There is also a piece at the bottom of the page that provides guidance should a local procedure need to be set up. There is a useful button that is included on each page of the NFRs, which allows you to revert back to the table of contents. This will help you navigate through the documents. Lastly, there is a FAQ link included at the bottom of this page where you can find answers to some of the most common queries related to that NFR. Another feature of the new NFRs are the set of icons, which can be seen throughout the documents. The purpose is to catch the reader's attention and emphasize important information, such as highlighting critical information, flagging that a form can be downloaded, referring the reader to contact details, and making the user aware specific text contains legal references. It's fairly self-explanatory when it comes to navigating the NFRs, but just to highlight some shortcuts when you're in the table of contents. It's interactive, meaning you should be able to click on any section of the table of contents and that will bring you to that particular section within the NFRs. If you are opening the NFR in Google Chrome and you would like to open links to other documents and external links in another browser tab, then you can right-click over the section you wish to open and select Open in a new tab. After the document overview section of the new NFRs, there is an at a glance section. It's called at a glance because it intends to provide an overview of the main topics and key information included in the document. Specifically, it covers an overview of document contents, who the key users are, so it outlines which employees will be most frequent users of the NFR. It also covers what are the key concepts. It covers the key objectives, so what the purpose of the NFR is. The at-a-glance page shows you the key relevant links found throughout the document. And lastly, the key contacts. In the case of general document queries, you can contact the governance and compliance team. If your query relates to a specific subject, all relevant contact details can be found in this section of the NFR. The at-a-glance section is useful and it provides a snapshot of the document highlights and could be used to identify the key elements without actually digging into the detail of the document. Checklists throughout the NFRs provide staff with an outline of every step they must follow in a given process or task, which is referenced in the NFR. For example, as shown in the picture on the right here, where a member of staff is placing an order over the phone, there are 4 steps they must follow. This will help ensure staff know what to do in certain situations and support greater compliance and consistency of application of the NFR. The new documents also contain some process maps or Visio diagrams like the one shown here on the right. Visio diagrams visualize a process in a step-by-step manner from start to end. Each of the shapes represent a place in the process as shown in the next slide. A Visio can be read from left to right or from top to bottom with each of the steps represented by an arrow. The oval shape represents the start or end point of the process. The square shape represents a typical step in the process. And finally then, the diamond shape is where there is a decision point. The new NFR documents also contain a number of internal and external links which enable the reader to be redirected to an external site where they can find more information or jump within the document. This is highlighted in the picture here on the right-hand side. All the NFR documents contain a glossary of terms. This is a list of terms which have appeared in the document and what they mean, structured in an alphabetical order. This is to make the NFRs more user-friendly and easier to understand. Each of the new NFRs contain a table listing out all acronyms and abbreviations relevant to that specific NFR. In the NFR, the full word will be used at first, followed by the abbreviation in brackets. Thereafter, the abbreviation will be used throughout the remaining NFR. The next feature from the new NFRs to highlight is the key control checklist, which is different from the previous checklist, which we saw as that consisted of a list of key steps which staff must perform when completing a given process or task. The key control checklist highlights the key controls located within the NFR. For example, NFR B6, which deals with Section 38 and 39 arrangements, has a key control that all funding is recorded on the SPG system, along with many others. Crucially, it's important to note that the key control checklist is a supplementary document to the NFR and should never be used as a substitute for the actual NFR itself. It's also important to note that not all the controls are included in the checklist, and it only contains the key controls, so it's necessary that you read each NFR to establish all controls. A link to the key control checklist is provided within each NFR, and each local area should ensure that they have these key controls in place. It's broken down in a little more detail on the next slide. Here we have an extract from B6 Key Control Checklist. The risk column here on the left identifies the type of risk arising if there's no control in place. So it might be a risk of fraud or a conflict of interest risk, for example. The key control column identifies the key control that must be in place. The section reference then tells us where the key control is within the NFR document, so what section it is in the NFR. It may refer to one particular section or a couple of different sections that relate to that specific control. The column marked preventative or detective tells us whether the control is aimed at preventing an error or detecting one. The frequency of control column informs us how often the control is implemented. So this could be on a transactional basis, weekly or monthly, etc. So as I said, the key control checklist highlights the key controls located within each NFR. Moving on to the change control procedure. We need to ensure the NFRs stay up to date and applicable. In order to achieve this, a change control procedure has been developed. With any important set of documents, such as the NFRs, there needs to be a robust process which is followed so that changes which are proposed go through the appropriate approval channels. The starting point for any change to the documents is the completion of a change request form. An example of this is shown on the right-hand side of the slide here. A link to the change request form can be found within each NFR, and it can also be accessed on the NFR website page. Once the form is completed and submitted, it will be considered by the appropriate channels of review, beginning with the governance and compliance team reviewing the request initially. Once the change request form is submitted, you will receive a reference number to acknowledge the form has been submitted. Here you can see the link to access the new NFRs. Accessing the NFR documents through Google Chrome will allow additional functionality which we have already discussed. So we've talked through the main features of the new NFRs. Hopefully, with the additional checklists, diagrams, icons, internal and external links, you will find them helpful as you navigate through the documents. We'll now touch on how the NFRs and the Integrated Financial Management System, IFMS, will relate to each other. IFMS will be rolled out across the local areas on a phased basis. To facilitate this, there may be particular sections within the NFRs that will have two versions, one for areas where IFMS is in use and a second for areas where it is not in use. It will be clearly outlined in the document where this is the case. For example, once the IFMS rollout begins, the NFR guidance on approving purchase orders may look like the example below. If your local area is using IFMS, you will follow the yes path. If not, you will follow the no path. So keep an eye out for when the IFMS rolls out in your area. Moving on now to the next section of the training, where we're going to discuss the purpose of each NFR and the key changes from old to new. The intention is to summarize the most important and relevant changes and not to provide an exhaustive list. We will be going into more detail on three NFRs, NFR B1 Procurement, NFR B3 Employee Administration and Payroll, and NFR B4 Travel and Subsistence. Across all of the NFRs, titles of roles have been updated. There was a lot of reference to old job titles in the previous NFRs. These have been updated across all the NFRs to make them as relevant to the current operating structure as possible. So let's begin with NFR A, which covers internal controls framework and principles. It provides an overview of the internal control environment in which the HSE operates and an outline of the general control principles. NFR A may be viewed as an introduction to the NFRs, providing an overview of how the NFRs form part of the HSE's internal control environment and an outline of essential elements to a successful control environment. NFR A focuses on the key features of compliance. Compliance is the process of making sure an organization and its employees follow the laws, regulations, standards, and ethical practices that apply to the organization. From a HSE perspective, the HSE operates in a highly regulated environment, and in order to comply with those laws and regulations, the HSE requires a strong internal control environment. If we look at an example of some of the rules the HSE must operate within, the HSE is required by the Health Act 2004 under Section 35 to have a code of governance, which must set out the processes and guidelines that we have to follow to ensure we're complying with the reporting requirements imposed by the Health Act 2004. The Code of Governance must also set out internal controls of the organisation, and this would include procedures relating to internal audits, risk management, public procurement and financial reporting. The HSE also needs to ensure that they are following the Code of Practice for the Governance of State Bodies. The Code of Practice for the Governance of State Bodies sets out that the board is responsible for ensuring that effective systems of internal control are implemented, including financial, operational, and compliance controls, and risk management, and the board reviews the effectiveness of these systems annually. The control environment relates to the set of policies, procedures, and standards implemented by the HSE in order to achieve an effective system of internal control across the organisation. Internal controls are designed to manage and reduce risk. The aim of these controls are the safeguarding of people and assets, accuracy, completeness and reliability of financial reporting, improved efficiency, preventing fraudulent behaviour, and compliance with appropriate laws and regulations. There are two main types of controls. There are the preventative controls, which prevent issues from occurring. This includes preventing financial errors, fraud, theft, breach of regulations, and so on before they happen. There is detective controls, which find errors, irregularities, or other issues that have already occurred. By detecting these issues, HSE local areas can take corrective action in a timely manner. The NFRs are a set of policy documents which set out the financial controls for the organisation. They are not meant to be detailed procedural documents for financial processes or activities, as these are contained within local procedures. The aim of the NFRs is to provide high-level controls to guide your local procedures. We all have a responsibility to ensure the efficient and effective use of the HSE's resources. Complying with the NFRs will help us do this and also ensure the HSE's interests are protected. All staff are responsible for being aware of and compliant with the controls outlined in the NFRs. The NFRs set out the minimum standards of financial controls that are acceptable across this very large and diverse organisation. However, budget holders may decide to apply a higher level of control than the minimum set out in the regulations in order to achieve the objectives of the NFRs. For example, expenditure control could be amended for local use so that the values that each grade has approval authority for could be lower than that allowed by these regulations. To be compliant with the NFRs, you must also be compliant with the Code of Standards and Behaviours. This code requires you to carry out your responsibilities carefully, honestly, and fairly. Always act within the law. Never seek to use improper influence. In particular, never seeking to use political influence to affect decisions concerning your official position. Follow guidelines in respect of offers of gifts or hospitality, and avoid conflicts of interest. A conflict of interest is any situation where a relevant staff member has directly or indirectly a financial, economic, or any other interest which might be perceived to compromise their independence. Another aspect of the internal control framework which is examined in NFR A is financial planning and budgeting. It assists the organisation to determine how much money can be spent based on the priorities set by the HSE Board and the Minister for Health. A budget holder is a member of staff who has the authority and is accountable for the expenditure of HSE funds. They should act responsibly in making expenditure decisions and proactively manage their available funding to ensure value for money at all times. Value for money is the optimal use of resources to achieve the intended outcomes from a HSE purchase or from a sum of money spent by the HSE. It is not only based on the cost of the purchase, but also on the maximum efficiency and effectiveness of the purchase. There is a full list of budget holders' responsibilities in section 5.12.1 of NFR A, which is useful for all budget holders to understand and to be aware of their duties. We will move on to the Controls Assurance Review Process, CARP, and discuss the role it plays in creating a strong internal controls framework. Under the Code of Practice for the Governance of State Bodies, the HSE must complete a formal annual review of the effectiveness of its systems of internal controls. One of the tools that is used to measure the effectiveness of the HSE's systems of internal controls is the Annual Controls Assurance Review Process, CARP. The key components of CARP are the Internal Controls Questionnaire, the ICQ, the Controls Assurance Statement, the CAS, and the Statement of Positions Held. The CARP allows the HSE to not only identify potential areas and activities which may require additional support and focus to strengthen controls, but also assists in highlighting the strengths of the HSE's control environment. Moving on then to NFR B1, which covers procurement. NFR B1 provides guidance on the procedures and controls used for procurement, including sourcing, tendering, purchasing, receiving, and making third-party payments on behalf of the HSE. NFR B1 provides guidance on capital expenditure and property transactions, and if we were to do a comparison with an old NFR, then NFR B1 has similar controls that were previously included in NFR 01 Purchase to Pay. There are a number of key control requirements for all procurement activities in the HSE. Firstly, you must make sure there are processes in place to approve and control expenditure. There also must be clear segregation of duties that exist in approving, ordering, accepting, and paying for assets, goods, and services. Each budget holder should have a step-by-step procedure for their area of responsibility to show clear lines of accountability. It's important that a single individual cannot request and approve a transaction, and no single individual can complete the entire purchase to pay process. You also have to make sure that expenditure is approved by authorised staff, including those with delegated authority in accordance with budgetary constraints and statutory or contractual requirements. You must ensure that value for money in the acquisition and usage of assets and goods and services is achieved. If buying from the UK, it's important to consider there could be custom implications and to obtain advice on this. You must also ensure that Irish and EU legislative and procurement requirements are always met and competitive and ethical procurement practices are observed. The rules from NFR B1 come from both government and EU procurement requirements. As the HSE budget is received from taxpayers, it's really important that if you are doing any buying, that it's done through an open and competitive process, so you need to bear that in mind. And finally then, you have to ensure that all records are managed in line with HSE data protection and record retention policies. Moving on to segregation of duties. Segregation of duties is a key concept within internal control that tries to prevent fraud, theft and error by having more than one member of staff approving or participating in various steps in a process. It's required to eliminate one person having sole control over a process to ensure appropriate oversight. In addition, nobody should have the final decision on the purchase of goods for their own day-to-day use. In the steps in the purchase to pay process, there must be segregation of duties between the initial identification of needing to make a purchase and the issuing of a purchase order to buy what is needed. There must be segregation of duties between the person raising a purchase order and the person recording the receipt of the goods or services ordered. A PO cannot be approved by the same employee who raised it. For non-purchase order purchases, the employee who approved the expenditure request cannot certify the receipt or approve the payment. There also must be professional procurement input on purchases above €50,000. And finally then, for creating and evaluating tenders valued at less than €50,000, a minimum of 2 staff must be involved in both the opening and evaluation of all tenders. They are the key requirements for effective segregation of duties, which are required to prevent fraud, theft, and error from occurring. There are some key steps to consider when making a purchase. Firstly, you need to identify what is needed, and is now the right time to make the purchase. Is there budget available to make the purchase? So confirming the availability of funds and the approval for those funds to be released. With regards to sourcing suppliers, where and who are you going to purchase your goods or services from? Is there a contract already in place locally or nationally? Is the product already in stock in stores, for example, the National Distribution Centre? If not, then the tendering process needs to be followed. You need to complete the purchase order and have this approved. There is a high level of reliance placed on the actual purchase order. If a purchase order has been issued, it's assumed that the steps that we've just spoken about have been complied with, and all that remains then is just to receive the goods or services and to pay the invoice. When you get your invoice, it's a matter of matching it off against the purchase order and the goods received note. There should be no delay at this stage if the previous steps have been followed. The expenditure bands and approval limits table lists who can approve what amount when you are making a purchase. You may recall in the old NFR 1 table, this was broken down into routine and non-routine expenditure. The distinction between routine and non-routine expenditure has now been removed, and the authorization levels for routine expenditure that were in NFR 1 are now the authorization thresholds in NFR B1. The approval thresholds relating to service arrangements or grant aid agreements are now included in NFR B6, Section 38 and Section 39 arrangements. The table here explains the requirements if you have a contract in place below the EU threshold. It sets out how to source suppliers depending on the estimated value of the purchase. If the estimated value is less than €5,000, this can be awarded on the basis of one written quote, but it is preferred if you get 3 quotes by email. If you have a purchase with an estimated value between €5,000 and €50,000, this can be awarded on the basis of responses to written specifications, such as sent by email, to at least 3 suppliers, or it can be awarded on the basis of responses to at least 3 quotations obtained using the electronic request for quotes facilities on e-tenders, currently called Quick Quotes. The Quick Quote facility on e-tenders allows contracting authorities to search for appropriate suppliers using common procurement vocabulary codes which match their particular procurement needs and may facilitate this process. Or it can be awarded on the basis of a formal tendering process by advertising on e-tenders. If the estimated purchase is going to be over €50,000, this must be advertised as part of a formal tendering process on e-tenders in line with DEPRA Circular 05/2023. You must obtain procurement support through procurement.support@hse.ie with the budget holder in the local area. We will now move on to sourcing suppliers. There are a number of options when sourcing a supplier, and starting the tender process yourself should be the last option that you choose. The first step you should ask yourself is whether it is sitting in stock in stores. If the product is not in stock, or if it is a service you require, the next step is to see what national or regional contracts are available. If there is a contract in place already, we are required to use this contract. This is where the work is already done for you in sourcing the supplier. If you want to check what contracts are already in place, these can be checked on HSE Pass through the link on the screen here on the right. The last option is commencing the tendering process. This is the slowest process and requires the most amount of work. Depending on the type of tender you're looking for, the process could take 4 to 5 months to complete, and as a result, you need to allow sufficient time if you're planning something for the future. In summary, the route to follow is firstly to check if it is in stores. If not, check and see if it's already a contract in place. And finally, if not, and only then, you go out to tender. As mentioned, when it comes to paying an invoice, it should be simply a case of checking the purchase order against the good received note and the invoice to ensure we have received what we ordered on the purchase order in the correct quantity, to the correct specification and at the correct price. Oftentimes, the effort is put in at the invoice stage, but really, if the earlier steps have been properly followed and if the invoice contains all of the correct information, this should be a straightforward step in the purchase to pay process. As a public body, the HSE is obliged to pay prompt payment interest, PPI, and compensation when an invoice is not paid on time. This amounts to a significant sum for the HSE each year and is not how resources should be spent. If invoices are not paid on time, the HSE gets charged prompt payment interest. In order to avoid PPI, the following steps must be followed. Get the baseline date right. So date stamp all invoices immediately on receipt. This is the baseline date. If goods are received after the invoice receipt, then this will be your baseline date. You need to ensure proof of delivery has been received. Check the invoice against the purchase order and goods received note. So verify that delivery details and goods are not faulty. Goods must match good received note and the purchase order for quantity and value, and that provides a basis for invoice verification. We need to get the invoice and moving immediately, so aim to process all invoices within 5 days of receipt. If there is something incorrect in the order or the invoice, then you should contact the supplier immediately and make a note of this. Getting the baseline date correct is critical to avoid unnecessary PPI. The baseline date starts the 30-day clock for getting the invoice paid on time, and it's one of the most frequent reasons for PPI. Baseline date is the later of the date the invoice was received and date stamped, or the dates the goods and services were received. The clock can be stopped, but it is necessary to document this. There may be an invoice dispute with the supplier, so there might be price issues, incomplete deliveries, or faulty goods. Another reason the clock might be stopped is lack of clearance cert, and if that's the case, the cycle resumes when the cert is verified. The clock should also stop if there are non-commercial payments. There can be times when following the sourcing rules are not applied. This only applies to urgent, unforeseen cases and must not have arisen due to a lack of planning or action by the HSE. It requires approval of a national director, the CEO of a hospital group, or the chief officer of a CHO, and it must be co-signed by the ACFO. It is also necessary that the head of procurement is notified. In order for the normal sourcing rules to be set aside, there must be significant risk to people, property, or be a financial loss to the HSE. Moving on now to the key changes between the old and new procurement NFR. The distinction between routine and non-routine expenditure has been removed across the document. Previous references to the capital project approval protocol that were included in NFR 1 is now in a handoff document to the capital projects manual and approvals protocol. The protocol acts as a toolkit on how to deliver capital projects in the capital plan and sets out rules to appraise, start, manage and administer all capital projects. The prompt payment sections that were in NFR 1 have been overhauled. Information has been included in NFR B1 on PPI. However, there is now a handoff to prompt payment of interest policy. Reference to the 4002 non-compliance reporting has been amended. Instead, now, the NFR states that self-assessments should be carried out. The 4002 reporting is still the current means for self-assessment in this regard, and more details on this can be obtained from procurement. Finally then, all references to management consultants are now in a handoff to guidelines for the engagement of consultants and other external support by the Civil Service 2006. This change affects previous items in the old NFRs, including provisions on business case approval, the procurement process, and contract management. Moving on to NFR B2, income, charges and debtors. The purpose of NFR B2 is that it provides guidance on the procedures and controls that must be followed when dealing with income, debtors and donations. It also provides guidance on how to protect HSE income sources, how to enable efficient collection of income, how to protect against credit risk, and how to enable acceptance of voluntary donations, gifts and bequests. It provides guidance in relation to the key controls and processes in place when undertaking the debt collection process. If we were to do a comparison with an old NFR, then NFR B2 has similar controls that were previously included in NFR 25, hospital acute charges and debtors, NFR 17, voluntary donations, gifts, bequests, memberships of boards and committees. There are a couple of key changes to flag on this NFR. The previous NFR was very much acute base only, and that has been updated in NFR B2. There is additional information included in the new B2 NFR regarding nursing home charges, so the excess over the Nursing Home Support Scheme Fair Deal contribution. Part of the HSE's role is to determine the financial co-payment arrangements between nursing homes and individual members. The NFR covers controls surrounding the collection of that income. There has been an addition of a new control to reflect a new regulation. On the charging of non-ordinarily resident inpatients and non-EU nationals ordinarily resident in Ireland, which is a tax-related concept. Basically, the number of days a person has been living in the country for any given year will impact their tax status. All staff involved in income charging and collection should be aware of the regulation. In the new NFRs, there is additional detail provided with regards to the procedures for referral to debt collection agencies, and this is following extensive SME and IFMS discussions. There has also been an overhaul of the appropriate legal proceedings around collection of unpaid debts, and it includes a handoff to the Office of Legal Services, OLS at hse.ie. Another additional piece that was added was around additional advice on the Residential Support Services Maintenance and Accommodation Contribution, RISMAC, including a handoff to the RISMAC guidelines. This advice is in relation to RISMAC maintenance and accommodation costs and the administration of this. The previous NFR had no reference to this. The last change to highlight is the addition of details specific to dealing with vulnerable or at-risk adults as it relates to debt collection. The previous NFR had no reference to this, so this additional information is included in section 2.5 of NFR B2. NFR B3, Employee Administration and Payroll, sets out guidance in relation to payroll, calculation of pay, payroll processing, and the treatment of over and underpayments. NFR B3 explains the standards all HSE staff have to meet in terms of pay while performing their duties. It ensures staff know the key controls and regulations in place for payroll, and it aims to ensure that pay-related over and underpayments are resolved without delay. If we were to compare the controls with an old NFR, then NFR B3 has similar controls that were previously included in NFR 03 payroll and NFR 04 payroll overpayments and underpayments. The control objectives in administrating payroll in the HSE are to safeguard HSE assets, ensure staff are paid only after the appropriate authorization, calculate and record payroll elements correctly, comply with all legal and taxation requirements, and correct errors or omissions in pay as quickly as possible, administer and apply payroll consistently across the HSE, and ensure information security controls for payroll are in place. The employee journey is best summarised by the map here on this slide. The first employee journey is recruitment, which might consist of advertising, identifying, sourcing, screening, shortlisting, and interviewing candidates for jobs. The next step is employee setup. This involves setting up new employee records to include initial terms and conditions of the employee. The third step is terms and condition changes. So you might be adding changes to employees' terms and conditions to the payroll system following approval, such as career breaks, carers leave, unpaid leave, and shorter working year. The next step is time return. This is where a line manager provides a return to their time returning officer, the TRO, each week, reflecting the attendances and absences for employees in their area. The TRO then enters this information onto the local system or timesheets to instruct payroll on the entitlement for all payments and deductions within the payroll period. The next step in the employee journey is gross to net processing. Gross pay is the total amount paid before any statutory or voluntary deductions are made. Statutory deductions might be things like PAYE income tax, USC, PRSI, pension contributions, local property tax, and ASC. Examples of voluntary deductions might include travel pass schemes, medical insurance, credit union deductions, and union fees. Once these deductions are made, this is the net pay amount. The seventh step is the leaver, transfer, or retirement step, and this is where an employee is leaving, transferring, or retiring, and the individual's employee records are updated accordingly, and final payments or transfer of payroll are actioned. The final step is the pensioner setup, and this is where an employee is converted to the retiree status. As an employee, you have a number of responsibilities when it comes to pay. You must ensure all your times worked and all absences taken are recorded and correct pay has been received. You can do this by accurately recording from and to times worked and all authorised leave on your payroll returns document used in your area and reporting any pay adjusting changes such as parental leave, shorter working year, cycle to work deductions, etc. You also need to be aware of your responsibility to notify your line manager immediately if there are any errors in your pay or leave balances. You also need to understand and fully comply with your local area processes for recording times worked and for application and recording of absences. And if you're unsure of the processes involved in your local area, you should contact your line manager to find out the process. Regarding sick leave or any occupational injury benefits, you must provide notification to the HSE, your line manager, of the benefit amount you are eligible for or are in receipt of to ensure that the necessary adjustments to pay can be made. This can be obtained from the Department of Social Protection directly or online. The notification of sick pay by the Department of Social Protection changed back in 2018. You must also review your available leave to ensure that requests for leave do not exceed the appropriate level, and you must give sufficient notice of leave. Moving on then to the responsibilities of a line manager. If you are a line manager, you should ensure that you have local procedures in place in relation to payroll. Line managers should ensure that these procedures are communicated and they are available for all staff in their team to refer to. They should outline the various roles and responsibilities of all staff, including those who prepare, review, verify, certify, and enter times worked and absences taken. And finally then, they should be signed and dated, and they should include a date for review and updating. The line manager also has to ensure that all payroll data for their team is completed on time, in full, appropriately checked, verified, and authorised. They must also ensure that any additional allowances or deductions are accurately recorded and reconciled to the timesheets, on-call sheets, or corresponding deduction forms, and they must ensure that self-certification never occurs. In relation to payroll reconciliation, line managers should ensure that there are checks and verification on the payroll data to ensure that only accurate times worked and absences taken have been recorded for their team. In relation to employee contracts, Line managers should ensure that everyone's contracts are up to date in their team, and they include commencement dates and end dates, salary scale points, and any other relevant conditions that apply to their pay. And these contracts must be signed by the staff member and appropriately authorised. If you have staff that are on additional payments such as overtime or on-call payments, then you must ensure that these additional hours are accurately recorded, checked, appropriately authorised, and that they are in line with HSE terms and conditions of employment. Line managers also have a responsibility when it comes to agency staff on their team. It's important to have procedures documented for booking, recording, and processing the agency staff members' payroll payments. As a line manager, you should also have a process in place to identify and monitor staff who might work for more than one employment group. If that's the case, additional checks and controls have to be put in place to avoid duplicate payments occurring in error. All agency timesheets should detail all the hours worked and if there is any absences taken. They should be reviewed for accuracy and completeness and then certified. When you receive the invoices from the agencies, they should be date stamped, reconciled to the relevant agency timesheets, and recalculated just to make sure that there are no errors. If there are any errors, these should be noted and investigated immediately. Once you're happy with the invoices and they have been checked properly, they should be signed and dated as certified for payment. Line managers do have additional responsibilities when it comes to employee administration and payroll, so a full list of these are included in section 2.6 of NFR B3. It's important that line managers make every effort to ensure that all staff on their team are able to avail of their full annual leave entitlement within the annual leave year. At annual leave year end, line managers need to reconcile annual leave records for all staff, and if there is any errors, it's important to investigate these immediately and rectify them. If for some reason a staff member has not been able to take their full annual leave entitlement in the year, the line manager needs to verify the carry forward balance. They need to document the reason why there is a carry forward balance, and if appropriate, they need to approve the balance to be carried forward into the next annual leave year. We already mentioned earlier that it's the employee's role now to notify the line manager of illness or occupational benefits received. The notification of sick pay by the Department of Social Protection changed back in 2018. The employee must let his or her line manager know of the amount of illness or occupational injury benefit they are in receipt of to ensure that the necessary adjustments to pay can be made. The line manager has some duties too. They must inform the employees of their obligations under HR Circular 05/2018 and remind employees to submit this information if or when the employee is out on sick leave. You also have to ensure the relevant systems are up to date with regard to sick leave. You must advise payroll and you must communicate as appropriately as you can with an employee on sick leave. HR and National Payroll have some useful memos and circulars regarding illness benefits and what to do in circumstances where you or your staff members are out sick, so you should touch base with them for more information. Although controls and procedures are in place to avoid incorrect salary payments, employees may occasionally receive an overpayment or underpayment of salary. All staff members are obliged to notify payroll if it is believed that they have been overpaid or underpaid for any reason. It is HSE policy to correct these errors as soon as possible. The Payment of Wages Act 1991 affords an employer a legal right to recover any overpayment of wages, allowances, or expenses from the wages of employees. When an overpayment to an employee is discovered, initial engagement with the employee should be completed by the party responsible for the overpayment. For overpayment greater than €200, a letter will be issued to the employee from the party responsible for the overpayment with the assistance of the FSS payroll department. The letter outlining the overpayment details must include items listed in section 5.1.1 of the NFR. There are also templates for these letters included in the NFR if you need to draft such a letter. As a line manager, you are responsible for confirming that you're in compliance with NFR B3 and sick leave circulars. You're responsible for submitting HR or payroll forms on time, and you must also notify payroll if you have staff members going on unpaid leave, resignations, job sharing, parental leave, overtime, or if there's any allowance due, all types of unpaid leave. If these responsibilities are not followed, it could result in employees getting over or underpaid. As an employee, if you are over or underpaid, you have to inform payroll immediately. If you have an overpayment amount up to and including €200 gross, that will be recouped in the next payroll run. For amounts overpaid greater than €200 gross, a letter will be sent to the employee asking them to contact the payroll office to arrange a repayment plan. If there's no response received from the employee within the period specified in the overpayments letter, then a second letter will be issued setting out the HSE's intention to start the recoupment process, basically to take the money back. If no response is received to the second letter within 14 calendar days, then notification in writing is issued to the employee stating that the recoupment will commence with effect from the next payroll run. For overpayments greater than €200, the number of pay periods allowed for the recoupment of the overpayment shall never exceed the same number of pay periods in which the overpayment actually occurred. So for example, if you were getting overpaid by €100 over 4 pay periods, when it comes to repaying that amount, you have to repay that over 4 pay periods. If an employee thinks that they have been underpaid, they should bring this matter to the attention of their line manager immediately. The line manager will examine the relevant time records for that employee and inform the employee, detailing the hours or value of the underpayment. Details of the underpayment will be recorded in the employee's next time recording return and the value or hours paid in the next pay period. Payroll department must keep records and correspondence of all overpayments and underpayments. A new addition in NFR B3 is the addition of a list of HR forms. It details where to send them and when to send them. You can find that in Appendix 5 of NFR B3. It's a useful page to have if you or someone in your team are taking different types of leave. There's a couple of key changes that we just want to highlight in NFR B3. There are additional requirements included in NFR B3 where each HSE, area HR and payroll division must ensure that there is a documented payroll plan for continued operations that exists in the event of a disaster or emergency. With regards to leave, overtime and pay scales, there was a lot of information in the old NFR 03. This has now been removed and has been replaced with a handoff to the employee handbook. There has also been an addition of a table which has HR form links that includes the forms deadlines and where to send the forms to. And finally then, an addition has been included that budget holders should conduct timely reviews of relevant payroll reports to monitor for overpayments and underpayments. Moving on to NFR B4, Travel and Subsistence. NFR B4 outlines rules which must be followed when making claims for allowable expenses or travel and subsistence. It explains the standards all HSE staff have to meet in terms of expenses while performing their duties. It provides information so staff know the key controls and regulations in place for expense claims, and it provides information so that staff ensure the appropriate controls are in place for expense claims. And finally, it distinguishes between allowable and disallowable expenses. So if we were to do a comparison with an old NFR, then NFR B4 has similar controls that were previously included in NFR 05 Travel and Subsistence and NFR 15 Other Staff Costs. If you're carrying out official duties away from your normal place of work, you may be repaid travel and subsistence costs. Expenses must be incurred wholly, exclusively, and necessarily in the performance of the duties of employment while on official business away from base and employees assigned to field duties. You must be authorised to travel and have all necessary documentation in place before you travel. The journey must be necessary in carrying out your duties, approved in advance by your line manager. You have to use the shortest practicable route, use the cheapest mode of transport, and where possible, use public transport. Examples of costs can include things like mileage, toll fees, parking or public transport costs, along with subsistence depending on the time that you are away from your base. All travel and subsistence expense claims must have valid supporting documentation such as receipts, original or electronic copies, or vouchers. If you are claiming travel and subsistence, you must give full details of each trip separately. Surmised or one-word versions of claims will not be approved. This is so your line manager can check and certify that the expenses claimed are correct. Expense claims must include the following details: employee number, employee location, date of journey, reason for journey, time of departure from and return to normal place of work, home and work address, and mileage and card details involved, and the amount of subsistence claimed. Claims must be submitted within 1 month of your journey. If that's not possible for whatever reason, then it has to be at the latest within 3 months of the journey. Claims can only be submitted outside of the 3-month time frame in exceptional circumstances. Where this is the case, the employee must send a memo to their line manager outlining the reason for the delay. The amount paid to you is based on the rates approved by DPER, your cumulative mileage, and your vehicle registration certificate. A list of the latest rates are shown in section 2.5.1 of NFR B4. There are rules which apply to what can be claimed. So no part of the journey which covers your usual journey to work can be claimed, and the shortest distance from home or work can be claimed. When reviewing and approving claims, line managers are certifying that the claim is correct and can be processed for payment, so you need to bear that in mind if you are a line manager. If you are a line manager and members of your team travel as part of their work duties, there are certain checks that you need to go through before any of your team travel. You must do these on an annual basis. You have to check that authorization to travel is in place, that up-to-date vehicle registration details are in place, as well as the insurance indemnity, and that the employee has signed the declaration to travel form. When a line manager is reviewing a travel and subsistence claim on HR and payroll self-service, they must check that the trip claimed was approved and necessary for work purposes, check that the travel route taken was the shortest and most economic option, and check that all backup is correct and that the claim is calculated correctly. Check that the employee has the above authorization to travel in place. So it's a good idea to sit down with your team just to go through the travel and subsistence rules that apply, and it can be easier to do this when a person joins your team as part of their induction so that the new member knows how the travel and subsistence claims operate. We will move on to travel rules. Travel will only be reimbursed for a necessary absence from the normal place of work. This is the place where the employee normally performs the duties of their employment. Travel expenses are paid from your home or your base, whichever is closer to the destination that you are traveling to. Every employee has a responsibility to ensure that all claims are timely, accurate, and relate wholly and exclusively for the purpose of the performance of their duties. Some key points that you should be aware of if you are claiming travel. Travel expenses can only be reimbursed in relation to a necessary absence from the normal place of work, and they should be essential and authorised. All official travel should be by the shortest practicable routes and by the cheapest practicable mode of transport. Public transport must be used where it is feasible. Claims have to be restricted where public transport could have been used but wasn't to the cost of the public transport. Travel expenses are not reimbursed for your normal route to work. If you have a meeting away from your normal place of work and begin that journey at home rather than your base, The mileage will be calculated by reference to the distance from home or base, whichever is lesser. So if the base was closer to the destination, the distance between the base and the destination has to be claimed and not the longer journey. If you are called back into work outside of normal working hours to deal with an emergency situation, then travel expenses can be claimed, subject to a max of 60 such claims, and must be emergency situation as defined for tax purposes. If you are submitting your travel and subsistence on the HR and payroll self-service system, then claims must be completed in full, submitted on time, and supported by receipts. Employees must ensure they are authorised to travel before travelling, and as I mentioned, they must have indemnified the HSE. Moving on to subsistence. The rules are set out in section 2.9 of the NFR, and you can refer to HR Circular 027 2022 for additional information. Some of the key points to be aware of are that you need to be away from your base for at least 5 hours before subsistence applies. The destination needs to be more than 8 kilometres away from base and home before subsistence applies. And subsistence is not meant to be a source of profit. Where any subsistence is provided free of charge, such as provision of meals or accommodation, no allowance will be paid. This includes if food is being provided at any meeting, no subsistence should be claimed. For overnight trips, 24 hours are claimed minus 5 hours for each meal provided. Where a claim is allowable for the 5-hour subsistence rate and a meal was provided, no subsistence claim can be made. And where a claim is allowable for the 10-hour subsistence rate and a meal was provided, the 5-hour subsistence rate claim can be made. The rules regarding subsistence are set out in HR Circular 027 2022. Subsistence will not be paid continuously for longer than 6 months in one place without special authority from the Department of Public Expenditure and Reform. If you have to stay away overnight for work purposes, overnight subsistence may be available if all the conditions are satisfied. You have to be more than 100 kilometres away from base and home, and as outlined in the NFR, there are times in exceptional circumstances where the line manager is satisfied that there is an operational need to stay away overnight, where overnight subsistence is available at a destination that is less than 100 kilometres away from home or base. The destination must, however, be more than 50 kilometres away from home and base. The overnight subsistence rate covers the first 29 hours, and both the night and day allowance will only be paid for absences longer than 29 hours. The rule is best demonstrated by an example I have on the next slide. If the employee was away overnight but less than 29 hours, then the overnight rate is the rate that's applicable. If the employee is away for more than 29 hours but less than 34 hours, then the overnight rate and the 5-hour rate will apply. If the employee is away for more than 34 hours, then they get the overnight rate plus the 10-hour rate. In certain circumstances, people have to travel abroad for work. You must be able to show that there is a benefit to the HSE and that you need to travel. All foreign travel requests are made using the Business Travel FT1 form. The FT1 form must be signed and approved by the Assistant National Director or equivalent for domestic flights and by National Director for international flights. Travel for National Directors must have approval from the HSE CEO. A signed copy of the FT1 form with the approved signature should be emailed to the HSE Travel Company at hsetravel@clubtravel.ie and copied to travel@hse.ie at least 2 weeks before departure date. This allows the travel company time to process your application. The contracted travel company will confirm flight availability and prices. You will get an e-ticket when you confirm acceptance in writing. It's important to be aware of the subsistence rate that apply to the destination that you are travelling to, as different rates apply depending on the country and city that you are going to. The link to the circular with all the rates is included in section 2.5.1 of NFR B4. Regarding accommodation, you must pay your bill on departure from the hotel. For rail, travel, and car hire, you must pay directly. These are then claimed back on your return. With regards to other expenses, employee expenses are allowable when they are incurred wholly, exclusively, and necessarily in the performance of the duties of employment. There is a time limit for submitting these claims. Claims submitted after 3 months will not be authorised unless there are exceptional circumstances. From an employee point of view, you need to make sure you complete the claim forms correctly in a timely manner and that you attach the proper receipts. It's also expected that you try and keep these expenses to a minimum. It's then sent to your line manager who will review the claim and make sure they are happy with everything and that all the receipts are included. Moving on now to what's allowed and not allowed under NFR B4. Allowable expenses include subscriptions to professional trade or business publications, protective clothing, so items such as hard hats, safety glasses, and work gloves. Expenses should be bought through a purchase order, ideally, but if they are paid through personal funds, they are reimbursable. Another allowable expense is certain conference or training fees. The cost of attendance at courses and conferences must be approved as being necessary for the performance of an employee's duties. Home and personal mobile telephone calls. The HSE will not pay any part of the cost of a broadband bundle or private call costs, and the HSE should not pay any part of line rental unless formal arrangements are deemed essential for emergency service requirements. In this case, 50% of the cost of the line rental may be paid. Any payment in excess of this is subject to tax and should be processed through the employee's payroll area. Fax, photocopying and postage may also be allowable. Charges for business purposes may be reclaimed when supported by receipts. A refund of some relevant academic fees, so you should refer to the HR division for details of the refund of academic fees scheme. Annual memberships of a professional body are an allowable expense in certain circumstances, where it is wholly, exclusively, and necessarily in the performance of the duties of employment in line with revenue guidelines. Some more information can be found in section 3.1 of the NFR. Moving on now to what's not allowed under NFR B4. Employee event costs, spouses, partners, or children's travel costs, parking fines or travel violation fines, including camping fees, travel club membership, such as giving access to airport lounges, complimentary drinks, and so on. Gifts for employees, such as retirement or leaving gifts, miscellaneous hotel charges, such as laundry, personal phone calls, meals, pay-per-view TV channels, alcohol, and phone use on an airline unless in an emergency situation. A full list of these can be found in section 3.1 of NFR B4. Moving on then to the key changes between the NFRs. So you may have seen alternative phrasing being used to describe the relevant motor rates applicable to staff on detached duty. The new B4 document references reduced rates in line with DPER Circular 1182. In the old NFR 5, it mentioned that the HSE had to be mentioned on the insurance documents. Now it's acceptable for the insurance documents to say HSE or employer. The approval of travel and subsistence documents, approval to travel, and the final approval of travel and subsistence claims are the responsibilities of line managers. In the old NFR, the requirement was for it to be a grade 8 or equivalent salary scale or above. However, this requirement has been removed, so once it's a line manager of any grade, this is sufficient. As a result, the employee declaration form, approval to travel form, has been updated, so just make sure you are using the most up-to-date form. We've also included references to NISRP, HSE, HR and Payroll self-service system and its use where available throughout the NFR. Previously, this was not mentioned in the old NFR. Finally then, links to the most recent travel rates are included in the NFR and these will be updated on a continuous basis where applicable. Moving on then to NFR B5, banking, cash and card payments. NFR B5 sets out controls for procurement cards, credit cards and fuel cards. It also sets out controls around the use of petty cash and franking machines. It outlines controls to protect HSE's finances, and it provides staff with guidance on procedures relating to banking. NFR B5 also outlines the key controls and regulations that should be in place for managing money on behalf of the HSE. If we were to do a comparison with an old NFR, then NFR B5 would have similar controls that were previously included in NFR 10 procurement cards, credit cards and fuel cards, NFR 13 cash and bank, NFR 28 petty cash, and NFR 29 franking machines. And again, there are a few changes. The first key change to flag is the additional detail which has been added to the section dealing with the cash management process, which references various corporate procedures for cash drawdown. This is now in a handoff to the Treasury Standing Operating Procedures. There has been an amendment to the language and phrasing in sections on banking policies and opening bank accounts. This is derived from the change in the vote and the HSE board, who can now make banking decisions. Also, there are no longer stipulations around public accounts and depositories. There are also increased controls for the new cash collection locations, which are included in section 9.2.1. The old NFR 13 did touch on this briefly, but now there are more controls around this specific area. There is a change to the control regarding petty cash. Petty cash accounts should be reviewed and closed if they have not been used in the previous 12 months. There is also additional information included on what can now be purchased online. So if you are working in a community setting, for example, you could purchase things online like online grocery shopping, online motor vehicle tax, TV licenses, etc. So these can be found in section 2.1 of the new NFR B5. Moving on to NFR B6, section 38 and 39 arrangements. These set out the respective obligations of both the HSE and the non-statutory agencies. It provides controls to support a standardised approach enabling consistency across these service relationships. The HSE must have in place appropriate contractual arrangements with all agencies that have funding released to them for the provision of services in accordance with Section 38 and Section 39 of the Health Act 2004. If we were to do a comparison with an old NFR, then NFR B6 has similar controls that were previously included in NFR 31, grants to outside agencies. And the main changes from old to new are as follows. An amendment to the section on performance management previously contained in NFR 31. This is now a handoff to the detailed procedural guidance which is set out in the HSE Governance Framework Manual, a copy of which can be requested from compliance@hse.ie. In the new NFR B6, there is also an additional reference to the SPG, or Service Provider Governance System, when recording funding and grant arrangements. This concept replaces the funding register and includes specific controls in respect of managing documentation. As with the new NFR B1, there is also the removal of the distinction between routine and non-routine expenditure. The approval thresholds related to service arrangements or grant aid agreements are now included in NFR B6, Section 38 and 39 arrangements. Moving on to NFR B7, Property and Equipment. This sets out the controls required to safeguard and account for assets that are required to be met by all staff. It ensures all staff are aware of the key processes in relation to purchasing and disposing of assets. It establishes policies and procedures for the correct and proper use of mobile devices, and it sets out acceptable, safe and secure standards for the use and management of mobile devices within the HSE. It also ensures that all HSE's assets are managed and accounted for in accordance with best practice and relevant laws. If we were to do a comparison with an old NFR, then NFR B7 has similar controls that were previously included in NFR 06, Fixed Assets and Capital Accounting, NFR 07, ICT Funding and Approval, NFR 18, Protecting HSE's Interests, NFR 24, Property Purchase Deposits, and NFR 30, Lease and Rental Arrangements. We will look at an overview of some of the key changes to B7. There has been an amendment to the section around the HSE's right to ensure that property owned by third-party organisations are used for the intended purpose for which the funding was advanced. The additional detail covers the HSE's rights, such as being able to enforce a sale to recoup the capital investment or the acquisition of lands, etc. There has also been an amendment to the section around HSE's options in terms of assisting an organisation to acquire its land, building or facilities. A high-level table is now in place to replace the extensive detail. It's also advised that property at hse.ie is contacted for advice given the complex area. Thirdly, the removal of the specific control to perform routine inspections of high-risk assets. While NFR A does cover the security of high-risk assets, it does not cover routine inspection of it, as this has been removed relative to the old NFR. There are also additional requirements provided around the appropriate information and level of detail contained within the fixed asset register. Lastly, there has also been an amendment to the capital thresholds. So only assets with an acquisition cost of more than €10,000 inclusive of VAT for individual assets can be capitalised, and no grouping of assets is permitted as per Deeper Circular 21/2020. This applies to all asset types, whether revenue or capital funded, and it's effective from the 1st of January 2022. NFR C1 deals with patients' private property and finances, and it sets out guidance in relation to how the HSE provides a service to care for a client's private property, referred to as patients' private property, PPP. It sets out key controls and processes that must be in place so that PPP is handled and processed in a compliant manner. Overall, the key objectives are to provide for the safe care of PPP, limit the HSE's liability in the event of any loss or damage to PPP, promote clients' independence, properly record and account for any movements in funds held, and comply with key legislation such as the Mental Health Act 2001 and the Assisted Decision Making Act. A list of the key legislation can be found in Section 2 of the NFR. And the last key objective is to comply with relevant criteria issued by HICWA and other related standards. So if we're to do a comparison with an old NFR, then NFR C1 has similar controls that were previously included in NFR 22, patient private property. And again, there's a couple of key changes. Firstly, there's been an amendment to the provision that a HSE client representative cannot act as a signatory on the local patient private property account. This provision now states that all such accounts require two signatories, without stopping the HSE client representative from acting as a signatory. The language used to assess and determine the capacity of a client has also been updated in the new NFR C1. While there have been no control changes, there has been significant changes to the terminology used. There are additional lines of detail added to the controls surrounding patients' private property accounts and banking. This includes ensuring that there is a custodian designated by the CHO Head of Finance. Moving on to NFR C2, Community Residence Finances. This sets out guidance in relation to community-based services provided by the HSE and the safeguards that should be in place in relation to this. Overall, the purpose is to set out the roles and responsibilities of HSE staff in relation to community residence finances, provide guidance on how to support clients' independence, safeguard our clients' interests, the HSE and its staff, and provide clear steps to show how to protect clients' money, ensure the HSE fulfills its duty correctly on behalf of its clients, and finally it deals with how the HSE levies a charge for accommodation and maintenance or daily living costs of clients. If we were to do a comparison with an old NFR, then NFR C2 has similar controls that were previously included in NFR 14, Financial Management in Community Residence. The key changes to highlight are as follows. Information has been added relating to financial abuse or exploitation. It's important that HSE staff are vigilant to any abuse or exploitation of service users, including financial abuse or exploitation. If there are any concerns relating to the abuse or exploitation of a service user, it should be referred to the relevant safeguarding team. Secondly, there has been an amendment to the section dealing with instances where supported banking is not an option. Now it's suggested that a patient private property account is the most appropriate option, and there is a handoff to the PPP guidelines. Thirdly, controls around community residence managers having responsibility to remain informed of insurance cover relating to cash handling at their location is now covered with a handoff to NFR B5. Another change to flag is the amendment to the requirement that local finance sections will need to be notified on an ongoing basis of new direct debit setups. This has been changed to General Manager Finance Specialist needing to be notified of this. Supported banking is also a key addition to NFR C2, which was not addressed in the original NFR. It's covered in section 1.6 and states that we should encourage clients to hold separate bank accounts to manage their personal funds. And if they need help to operate these accounts, local areas should put in robust procedures to safeguard both the client and the HSE from exposure to avoidable risks. Moving on to the final NFR, NFR-D, Financial Reporting. NFR-D sets out the accounting policies used in the preparation of the HSE's annual financial statements, AFS. It provides staff with guidance on procedures for capitalization of tangible fixed assets, inventory management, stock taking, obtaining sanction for special payments and write-offs, write-off of bad debts and stock, and finally, journals, accruals, and provisions. If we were to do a comparison with an old NFR, then NFR-D has similar controls that were previously included in NFR 02, Policies and Procedures Guide for the completion of AFS, NFR 06, Fixed Assets and Capital Accounting, NFR 19, Inventory Control, and NFR 26, Department of Finance Sanction. We'll look at some key changes from NFR-D financial reporting. The threshold for losses of special payments which require a note in the appropriation account is now set at €30,000 and will require finance sanction through the Department of Health. The section dealing with emergency issues and the requirement to be supported by a signed requisition has been removed. There is an additional control item dealing with stock valuation. The new NFR states that the only method to be followed for valuing stock is the lower of cost or net realisable value as per FRS 102. The language for conducting a physical count has been simplified and put in a flowchart. Write-off approval should now be obtained at the location, that is head of service, head of finance hospital group or a CFO, and not the ACFO finance specialist. They are reported to the AFS and ACFO for consolidation of the letter of sanction and subsequent Department of Health approval. You will be glad to know this brings us to the end of the training session. We've covered a lot of information here, which I hope you have found useful. I really hope you find the new NFRs a lot easier to navigate through and find the information you need. There is a change control process in place, so if you are reading through the NFRs and feel something needs to be amended or changed, please send it through to us and we will consider the change and discuss with relevant parties. You can contact us via email with any questions or queries relating to the NFRs. Our address is govn.compliance@hse.ie. Our Governance and Compliance YouTube channel has training videos of each of the individual 11 NFRs. Thank you for your time today.